So what we did is if we take vol scaling, we add a few other things, some momentum overlays, and then we have a cross-asset correlation model that we use. We take a multi-asset portfolio and we apply all these risk controls. What you find is in something like Jan, we have to use old data because these are proprietary models. In Jan 2020, we had a big rate move higher and commensurate sell-off in basically all assets, the Volmageddon period. You see we cut risk off our cross-asset correlation model. If you look at a chart from COVID, you would have seen the vol scaling model kick in, but you can see vol scaling kind of kick in here around the bottom in Volmageddon. So this is how you run a multi-asset portfolio with some form of risk-based tactical asset allocation. But it doesn't really tell us what that stuff is doing, if there's any convexity to it, if it's effective. So what we can do is then say, well, let's pretend I know the SAA. So these 4 lines, this is multi-asset, so we've got bonds, credit, inflation assets, mostly commodities and tips, and stocks. Figure out the SAA, subtract the return of the SAA from this portfolio, and I'll get what this overlay will look like. So what I then did is plotted puts versus running an overlay program. And this is pretty convex, which is on a 1-month basis already you see some convexity. At first you might say I didn't think systematic strategies would be convex, but if it's a systematic strategy that's based on vol scaling, it should be hypersensitive to volatility. And so, voila. On a 3-month basis, it looks much better. By then, the portfolio has scaled properly. It looks just as convex as an option program, but you get just a little bit of convexity to this side, just enough to be flat. One of the things about vol scaling is you take more risk, and this is something that I think investors keep missing with trend, and they miss with things like these vol overlays. It's pretty hard to know when to take risk. When vol is declining or low, actually holding more risk is well worth it. So this strategy takes some risk, and that helps subsidize all these cuts back and forth.